Welcome everybody to Crypto Rosetta. My name is Savage. Today we're going to be having a look at Phantom. This is going to be a lower time frame video. Make sure you check out our higher time frame video up above if you haven't already. Let's get into the charts and see what's going on. Before we jump into the analysis, just want to say it is the last day for fantasy crypto entries. So if you haven't already, make sure you join the Discord, verify yourself, and then come down here, read the fantasy rules, and then look to participate. This is completely free and you can win up to $150. So make sure that you join the Discord if you haven't already. Links are in the description down below. Okay, so let's get into the charts and see what's going on. Okay, so we're going to go over the two ideas that we are looking for here. So the idea for continuation to the upside here is still that we could be potentially looking for the C wave to the upside. We have come down already towards this 0.786. Now if we do look to push down a little bit lower, we don't really want to lose this 0.854, which is sitting here at this 20 cent 17. Losing this zone makes it more likely that this is going to be playing out into our direct bearish situation. But for as long as we continue to hold this low, which is sitting here towards this zone of this 21.33, we can look for this possibility of continuation to the upside, but we don't need to start seeing the good structure starting to develop up here. Otherwise, what we could actually be doing is just looking for this corrective structure to develop to the downside, where this is actually a bigger A, B, and a C pattern, looking to push us down here towards this zone of this 10 cent 61. So as long as we fail to break back above this 51.55 to this 32.75, I'm just being very cautious here that we could still see continuation to the downside in another C wave here. Now we have already come up into this zone, so it is possible that our B wave could be over here already, and we're starting to look for this push to the downside in a C wave. But looking at the size of this previous move here, it does seem likely to me that we could see something like this play out still here, just so there's a bit more equality in the time relationship here, where we could see this B wave look to still be in place. So it's still going to be keeping an eye out for that potential that if we do see a move back to the upside here, this could still look for a rejection to the downside in this C wave. Okay, so let's get into the two ways that we're looking at this. So I'm going to come down here into the 4-hourly now, and we're going to discuss what we are looking for. So if we're looking for that possibility of a break to the upside, what we'd be saying is we are looking for an impulse. Now we would have to count this as a diagonal over here, where this would become 1, and then we'd be looking for our wave 2. Now we have come down here into this golden pocket area, which is a common retracement. We also have achieved this 1-to-1 if this is a C wave, where this is A, B, and C. Now we also need to be aware there is the possibility this could become WX ABC for Y. So we need to just be aware of that, because this last leg would have been very short in time compared to this previous section here. So this is why I'm just being cautious. You know, if we do see another move to the upside here, this could actually still mean that, you know, we still need to come back down here one more time. So we're going to have to keep an eye on that. If we fail to actually move up high enough, it could mean that basically, unless we take this high here, we could still see another move to the downside. Still wouldn't change the idea here, but effectively what this would just mean is that we are still looking for this wave 2 or this B wave to form. If we lose this 21.33, this invalidates this idea. Now looking for this, we would be looking for 1.618 up here, 51 cent 39 to confirm this structure. So we're going to go over this move to the downside here. Now it is possible that within this structure, the C wave could be looking to complete already. If we are looking at the C wave completing, what we'd be arguing then is that we're looking for something like this, where this becomes 1, 2, 3, 4, 5. Now invalidation of this current count would come by crossing this 24.84. What we'd want to see is a 3-wave move to the downside here, looking to hold support in this green box area, which would be this 25.25 to this 25 cent region. Losing 25 cent would make this less likely that this is going to play out, and invalidation would come by crossing down below this 24.84. So if we look at this move coming back down here in 3 waves, we look to potentially retest this golden pocket. Now this is an interesting level to me, because we've got some lows within this zone of this golden pocket here. So I'm going to be keeping an eye on that 25.12 to this 25.15. If we do see price look to push to the upside, we'd need to see 5-wave structure here, looking for this 26.61 for this 3rd wave, 3 waves down for a 4th, and then we'd need to be looking out for this 26.96 to this 26.74. If we do get a 5-wave move like this to the upside, we need to be a little bit careful, because this structure is so choppy here. We need to always be on the lookout that we could see something like a flat correction. So what we need to see is 3 waves to the downside, holding 25.81 to this 25.25, and then seeing continuation to the upside. So this is looking for that more bullish move to the upside. Effectively, if we did have to come back down here to this golden pocket once again, what we'd then be looking for is 2904. So we need to see a 5-wave structure develop to the upside first for us to start looking at this bullish move. Now, if we are looking at that corrective structure still to the downside, what we could say is that within this, what we have here is that this move is 1, 2. This becomes our 3rd wave here, triangle for 4th and a 5th. Now, until we actually move back above this 2591, we need to be careful that this doesn't become 1, 2, 3, 4, and 5 to the downside still, looking to extend out. Now, this would only be confirmed by a move down past this zone of this 2406, in which case what we could see is this move could actually become 1, 2, 3. We'd be looking for a 4th and a 5th, and this would mean that effectively our 5th wave is still looking to push down a little bit more, and this would kind of align with that idea that within the structure, you know, we're looking to test some of these lower levels here, possibly into the 786, which would be a 1.236 of this as an A wave to the downside. So going to be keeping an eye on this lower support zone. Losing 2343 makes it less likely we're going to see that continuation to the upside, but until we actually do, I'm still looking out for that possibility of a bounce here. Now, the key thing within this is we could also argue that if we're looking at this as a 3rd wave into this low, we could have this looking to complete as a diagonal. So if this is our 3rd wave into here, we have this as a 4th. What we could be starting to form is something like this to the downside as a diagonal pattern, in which case this could become 1, 2, 3, 4, and 5. Now, invalidation of this currently would be a move back above this 26, 27. This is why even if we see something like this A, B, C, we still need to just be careful that we aren't getting something like a diagonal pattern that's still looking to form to the downside. So we need to get a move back above some of these highs for those more bullish counts to take place here. And obviously, until we start to take some of these key levels, these moves can always look to extend directly to the downside, which would be looking at that idea that from further back here, we have that more bearish case where what we could argue is that within this move, we have this is 1, 2, this is 1, 2 here, and effectively looking for that possibility that we're looking for a 3rd wave, which would only get confirmed by a push down towards the zone of this 22, 27. But if we start breaking down directly here, we need to be a little bit cautious that within this, we don't have this as a bigger 5-wave structure developing, because one of our higher time frame counts, we're still looking for that possibility of a 4th wave over here. So effectively something like this, where we look at this as A, B, 1, 2, 1, 2, 3, 4, and then we're still looking for that possibility of a 5th wave to the downside. Now, that target area would be this 1922 to the 1627. So until we actually start breaking above these highs over here, we just need to be very careful that this move doesn't look to extend out here and become a bigger 5-wave move where we look to push down into some of these lower levels here and possibly down towards some of these zones here. So these would be our areas of interest: 2133, 1908, and this 1593 as possible continuation to the downside here. If, however, we start to cross this 1.618 at this 1593, we need to be very careful then that this whole move here isn't a 1, 2, 3, 4, and 5, which would align with one of that more bearish count where we're looking for a 5th wave still to the downside. So that's what we need to be careful of here at the moment. If we do continue to break down more aggressively here, this would start to imply that we are, within an impulse to the downside, not within this corrective move. But, we still have support here. We still have fib support. There's still some horizontal zones here that I'm keeping an eye on. If we do continue to hold those, then we do have that possibility that we could see price look to reverse to the upside in either the corrective move here, where we're looking at this as a bigger A, a B, and a C, looking for this 3922, or alternatively looking for that much more bullish case here where we could be looking for a bigger impulse to the upside. Until we actually cross 2133, this is still one of the possibilities here where we could be looking for a bigger move to the upside in this white wave count. Really, unless we start getting a sustained break about this below this 2343, this option is going to be still a viable count. Coming back in here and having a look at the CPR, what we can see is these lines are continuing to print to the downside. So this is not a good sign. We want to start seeing these print above each other to say that we're going to be getting a trending move. Now, if we do look to hold this level that we are currently sitting at and hold these 25.39 to this 25.28, potentially what we could see is price could start to get gravitated to the upside. So our upside targets for today is this 25.82. We have this 26.42, this 26.90, and this area up here, which would be this 27.43. So if we do see price continue to push to the upside here, potentially we could look to test some of these zones. If we, however, start to break to the downside here, possible targets for today is this 24.75. We have this 24.25, 23.66, and this 23.19 as potential downside targets for today. So this would align with actually coming back deeper here, where, you know, possibly we're going to look to come back down towards something like this 702 or this 786 lower down here, and this move is going to start to break down in that bigger idea of this being 1, 2, 3, 4, 5. So that's why I'm just saying we need to be careful until we start breaking these highs. There is still potential for some downside to come in here. Now, moving over and looking at the weekly CPRs, what we can see is that we are currently still between these lines. If we do see any kind of a three-wave move to the upside, I'm going to be looking out for possible rejection, or for this 26.91. We have this 27.87 and this 28.83, which would be areas of interest for the rest of this week. Obviously, we will get new lines printed as of tomorrow, so these are not only going to be valid for today. If we do see price start to fall away, we still have this S1 target sitting here at this 23.83 as a possible zone for a reaction. Also to the downside, we have this 21.83 as a secondary point to the downside here, where we could actually see price be gravitated to. Now, if we come over here and have a look at the monthly CPRs, what we can see is that we are currently sitting between these two lines here, between our bottom central pivot line and this S1 line. If we do see price move back to the upside here, I am going to be very cautious of this zone 29.43, 28.27, and this 27.34 as possible areas we could get a reaction. If we just see something like three waves to the upside here, that would align with that idea of seeing that continuation down. If, however, we do start to see price move back above these this month, we do have upside targets of this 35.43, 40 cent 37, and this 47.44 to the upside. If we do look to continue on down here, possible support could be found at this 23.40, which would align with coming back into some of these previous lows that we've got here. And then other targets for this month lower down here would be the 16.33 and this level here of this 11.35 if we start to break down in a bigger way. So we need to just be very careful here. If we fail to form that impulsive structure to the upside, we could actually continue to move down and find some of these lower levels. Now, we don't always have to hit these. These are just potential pivot points within the market if price moves into these areas. Okay, so I'm going to leave the video there. I hope you found it useful. If you did, please smash the like button, hit that subscribe button if you haven't already, turn on those bell notifications so you never miss a video. Leave us some feedback down below, and in the description you'll find links to Discord. Come check it out, it's free to join. Everyone have a great day. We'll see you in the next one. Take care.